right, plenty of things that the budget has really set in motion. But Mr. Gokar, if I may come and ask you this question, we're getting the final fine print now. 69,500 crore is the divestment target. They could achieve just 22,000 crore in the previous fiscal, and that's something that's disturbing, and which is why counters are reacting. ITC, L&T, the government now plans to sell its stake in Sooty assets. Is that a wise move, or is this destabilizing at this stage? And of course, the target that we spoke about, 69,500.
The divestment of the Sooty portfolio has been again on the cards for a while, and it makes absolute sense. If the government inherited this from the old UTI and has held on to it for the last 10 years from the time that the UTI was restructured, there was absolutely no reason to hold on to these stocks in any strategic sense. These are all companies that are actively traded, blue chips for the most part. So they should have been sold off over the last 10 years. It wasn't done. It gives the government an opportunity to start to cash in on those very, very valuable stocks over the next year. Now, obviously, you can't dump them. They cannot be unloaded at one go. That will destabilize. But I think you can sequence it. You can time it in a way which does not upset markets. And I think it makes absolute sense. Whatever views you may have on the public sector as a strategic aspect of policy, these holdings are not part of that, and I think they have to be put into the market.
Right, Dr. Gokan, what's baffling to some extent is the market reaction. With the exception of Maithili, I'm yet to see a commentator who's really taken a critical view on the budget so far. Swami, who's usually critical, is, I think, unusually bullish today. What do you think? What is it that the market is not liking about the budget? Or do you think it's just because we've seen such a rally? Like some of the market experts are pointing, you shouldn't read too much into the market movement today. But do you think there's something in the fine print that's probably bothering markets? What could it be?
I'm hard-pressed to explain this. I saw the speech and I came straight here, so I haven't really had a chance to look at what's happening in the markets. But obviously there was an initial, it was a fair amount of volatility while the speech was going on, but towards the end, I think when it came to the tax announcements and so on, you saw this starting to surge. Perhaps the uncertainty about the sort of more, let's say, the harsher laws in terms of how black money will be traced and treated. Does this give the tax authorities a sort of lever to come down on people, guilty until proven innocent kind of an approach? I think that may be a contributory factor. The principles are quite sound, but people are always nervous about how new tax laws are going to be implemented. There are issues about, like I said, the National Infrastructure Fund is a solution that is being proposed, but I don't think we yet know how it's going to be operationalized and what its effective, delivery mechanism are. We can't afford to wait very long for infrastructure. All of, speed is of the essence, and the more details we have, the better off, the markets, or the more, let's say, assuaged the markets are going to be.
Right.
But I don't really have a, persuasive explanation of why markets are reacting negatively.
Right. Probably someone who can answer that question on why the markets are reacting this way is Jim O'Neill, joining us live from London. One of the finest global leaders. Jim, thanks so much for joining us. The consensus view here in India, at least, is that this is a pro-growth budget. What is your view? Why do you think the markets haven't taken this budget on their stride? What's your view?
Well, like your guest, first of all, thank you for having me on. It's nice to join you. As your previous guest just said, then it's not entirely obvious, is the honest truth. I think part of the dilemma, and I remember actually having a discussion briefly with the finance minister about 4 weeks ago about what I'm about to say, that part of his problem on the day is that Indian markets have done so well the past 9 months, and the whole environment since Modi was elected has been so supportive that to actually create some wow on the day was going to be difficult. And when I look at the details that are coming through as I wake up here in London, I don't see anything that makes me go wow. And so maybe there's a little bit of disappointment that there's not any major eye-catching thing on foreign direct investments, etc., etc. But other than that, I'm not sure, because against the tone of what I've just said, there appears to be a lot of small good things from a business perspective, and critically, to sustain the more ambitious economic growth rates that India is talking about, it looks to me like a lot of those things collectively are going to be a pretty good thing for India going forward. So sort of raising the supply side of the economy. So all these things about boosting infrastructure, lowering the corporate tax rates, all of those seem to me to be pretty good. But there is nothing that makes you go, wow. I'm very interested to know a bit more. I see there's been something said about the inflation targeting, if that were to, in the details, imply that there's more true independence for the central bank. If that were the case, and obviously I have no idea whether that's what it means or not, that would be a really good thing as well, in my view. The actual statement about inflation as it stands is not particularly eye-catching either, but it all kind of looks good. But the markets have been trading so well for many months ahead of it, of course.
Yeah, Jim, can I ask you a question?
Sure.
Yeah. So, what's your call on the
I
oil?
don't know if you can answer it.
Yeah. So, what's your call on the oil? Because oil is a big story in India, and for the first time, we are seeing a difference of the Brent is at 62 and WTI at more like 48, 49 or something like that. So
Yeah.
the gap is increasing. So, what's the call? I mean, why? What's happening there?
So I was thinking before I joined you guys as to whether the oil issue has become a net, or let's put it like this way, a less positive thing in the past weeks. And in addition, I'm going to play a bit of a cop out here. Of course, oil prices. All we know about oil prices is they're not going to stay stable, so they're going to go up and down a lot. And my own guess, which if I'm right, is not a great supportive thing either, is that I think after this huge decline since the late last year, I personally suspect oil prices might have seen the low. Primarily because of the big drop in the rig count going on in the United States. So some of the supplies coming out of shale gas might not, in the immediate future, be as big as many people have hoped for. And obviously, if that were the case, then one of the really important positives from the rest of the world for India might not be as strong as it's been. So the past 9 months, India has had 2, maybe 3 fantastic things going on together. It's this whole sort of love affair with Modi, which I personally have been front and center about. And let me again emphasize, from the all the substantial but small things announced today, I think it should be enough to keep that going. But it also had this huge drop in oil prices, which has stopped, and of course with it, the decline in Indian inflation. But if you look at what's been said about inflation, unless I can hear a lot more about something in detail on that, it doesn't look any huge positive thing to get excited about that from the budget.
Jim, hi, this is Punita Kumar Sinha. I was just curious, you
Hi.
made a comment that you didn't see a wow factor. And, I'm just wondering, what would you call the wow factor? I thought there were lots of very positive initiatives, and that could have a very long-term impact on India and, making India a better place for investors to invest and do business in. So what is the wow factor that you were looking to see?
Maybe it's because it's early on a Saturday morning here in the UK, but I thought I may get asked that, of course, because I said it, but I'm not exactly entirely sure what the wow thing would be anyhow. But something. I guess if I put it in the context of a year or 18 months ago, where, as I think many people know, I had quite a few conversations with some of Modi's advisors about the long-term environment for Indian economic growth and the policy framework. I'd like to see India being a lot bolder about some really important core things such as education and health foreign direct investment, so substantive reforms in terms of foreign direct investment laws, being prepared to spend a lot more on education, a lot more on health. I'm actually coming to India this weekend to spend a few days linked to a project I'm working on about antimicrobial resistance, which is an enormous challenge for many countries in the world, India in particular. And these are the sorts of things that stand between India and 10% growth for the next 30 years. And I haven't seen anything specific announced so far, and I may be wrong because obviously I'm just seeing things as they come out. I don't see any of those things. I'm kind of like, wow, that's it. That makes me think India's definitely going to grow at 10% for the next 5-10 years.
But Jim, just one final comment. You've seen budgets across.
Of important, positive, small things that I am observing, which when one has a chance to look at them carefully, could be very positive for private sector investments, for Indian business in India itself, which at the end of the day, that is almost definitely the most important thing to drive Indian economic growth, to make sure it goes higher than 7.5%.
Right, Jim, stay with us. So we've got to get some comments from Dr. Gokarn as well. Dr. Gokarn, the other thing that's probably not gone noticed is the announcement that he made on a monetary policy committee now. So that's a significant move. I know much has been written and said about this. Do you think that's welcome? Do you think that's the way to go for a country like India?
Well, I think the idea of collective accountability is very important. This is a very, very stressful decision to make, whether to keep rates constant or move them by 25 basis points here or there. Right now, it devolves entirely onto the governor. He may take any advice from anybody, but ultimately the decision is his or hers. So a collective responsibility, I think, is important. But you have to be careful about how appointments are made and what the incentive structure for committee members is. Are they accountable to the larger purpose of inflation management? Are they given the independence to do that? Or are they always looking over their shoulder for signals from the ministry or whoever else for actions? So a committee has to be, the effectiveness of the committee will be based largely on the comfort that people have with their independence and their autonomy. So how the Reserve Bank Act, which is what is being talked about, you have to amend the act to be able to enable this committee. What it does to buffer these individuals from influences, I think, is, so is it fixed term appointments? Right. Is it something else? Those are mechanisms, those are details that really have to be worked out to give us that confidence.
Before we let you go, one final question, and Governor Rajan had said the next milestone for the rate cut cycle will be the union budget and the quality of fiscal consolidation. The fact that a pragmatic stance has been taken and 3% will be achieved only in 2018 now and not 17, is that something that you think buys argument with RBI and its boss?
I think the sort of reconciliation there is going to be the commitment to investment. So to the extent that the slippage is we are being assured that 0.3% of GDP is going to be used to build assets, should allow the RBI some space to consider this as reasonable. I can't make a prediction on how it's going to react, but I think the question, the pressure on the infrastructure sectors is acute, and if we don't get it fixed now, I think we've lost the battle. There is no time left to be thinking of newer ways or different ways of dealing with infrastructure. I think the time is right now, and this budget does provide a start.
Dr. Gokarn, thank you so much for spending the time and joining us with that perspective right here on ET Now. Nikunj, you may want to chat with Ramdev on the market reaction while we get some of our CEOs mic'd up right here at the CIS studio. Nikunj?
And Sandeep, it's interesting that whereas all of us are excited about the push the infrastructure sector is getting, let's look at the BSE Capital Good Index. Now, the index which really represents the core of the infrastructure sector, it's got engineering company, machinery companies and some infrastructure names. That index is down by about 354 points. I can understand for Nifty there's a technical factor, ITC is dragging it down, some short selling is happening somewhere, but Ramdev, this is one sector which has got the maximum push. Yet the BSE capital good index is down by about 350 points. Shouldn't it be the other way around?
I think there were a lot of short-term expectations built in last 2-3 days. So clearly, the things are going to be little medium term, maybe second half of the year. I mean, there is nothing which can say that okay, from 1st April, this thing is starting in a big way. So I think my sense is decline is a lot more technical, and the excise and SUTI cell combined is just breaking the ITC,
So
as
is
a
the
stock.
decline a buying opportunity?
I mean, that's what my sense. I mean, in the sense that everything is perfect to the extent I understand, and now with the corporate tax, I mean, 25%. I hope he implements that 25% in the next 4 years. I think it's a huge. I think almost a percentage drop. The total net profit growth on the current base itself will be about 12%. So for the companies which are paying say 33% tax today, you come down to 25%. So the increase in the net profit itself will be about 12-13%. So on an enhanced base, it will be much bigger. So
EPS goes up.
yeah, so that's a clear savings onto well-run, highly profitable and tax-paying companies. So which is you cannot deny. I mean those are the companies where we concentrate. But technically, I think today, yesterday we had a huge rally. Today also, while budget was being presented, it was very high types. And I think FIs are also must not be on the desk today, and they would like to take a final stance only after all the analysis on Monday morning. So I would think that it's more technical than anything to do with the budget.
It's very reassuring to hear that today's selling we should not read too much into it.
Yeah.
You're missing one aspect of the budget, which is that the surcharge on super rich has gone up. So somewhere this budget is bad for you.
Yeah, I mean, but that's a 2% on, and we need to also see if corporate tax is coming down from 33 to 25, 30 to 25, what will happen to the personal tax? Will they also, typically they keep it at the same level, the maximum marginal, that also I think will come down from 30 to 25.
So are SBI and L&T, are they both clear buyers now? Assuming that there is thrust on infrastructure, the corporate dominated banks will do well and India's biggest engineering company would benefit?
Yeah, so I don't think the recommendation changes on any stock because right now market is down by 200 points or something like that. I think budget is perfectly all right, and I would have done, I will do what I would have done pre-budget also.
So nothing changes?
Nothing changes.
So on a 3-year basis, assuming that the architecture of the country is changing now, the tone is not consumption, it is investment. Do you think HDFC Bank will make more money or SBI will make more money from a 3-year perspective?
Of course, the base is different. I mean, SBI even now makes much more money than HDFC, but the rate of change of the profit on a 3-year or 4-year cycle for SBI could be higher than that of HDFC. But the valuation for SBI is lower than HDFC Bank. So, I mean, you have to juggle that.
Things.
Yeah.
Okay.
So Ramdev, this is Punita. I wanted to ask you, if you are going to now recommend a model portfolio to your clients, are you going to change anything that you had in your prior portfolio? Are you going to change the allocation to different sectors and stocks?
No, I think in fact the change will happen more towards more profitable, more tax-paying companies right now. So in fact, the better companies, high tax-paying companies will get little more allocation than earlier.
And what about, we've seen some initiatives announced, it seems, for education and for healthcare. So would you, I mean, the education stocks have been really out of favor for a long time. Would you see some action there and also in the hospital-related healthcare stocks?
That's not my style of buying stocks. I mean, first we want to see the corporate profits, and then then assess whether to invest for the long term or not. Because the short-term proposals and all, they don't make that much change in my mind as far as selection of stocks are concerned.
Okay. So you're saying basically that you're not going to change your allocation or your view on the markets post this budget, positively or negatively?
No, see, I was always fully allocated and I was quite bullish on the market, so that I remain so. I'm just changing a little bit. The more profitable companies, the companies which are paying 34-35% tax, honestly, for many years, I think those are the companies, their profile will change for better in the years to come.
Fair enough.
All right, let's get some comments from our panelists. We've joined by Malvinder Singh and Ajay Shriram as well. We'll be joined by Mr. Chandrajit Banerjee and Kiran Mazumdar Shah in just a bit. But Swami, to you first. Let's put things in perspective now. It's been about an hour and a half after the budget speech. Your initial reaction was that it's a very good budget. Your slight disappointment that he's not stuck to the fiscal targets, but your initial reaction was it's a very good budget. Now that you've seen some amount of fine print, Maithili has pointed a few things as well. What's your call?
No, I would still say I would give this 6.5 to 7 out of 10, which is one of the higher ratings.
Is this a budget for Achhe Din?
This is a budget for Achhe Din, provided only that those growth figures are real. That's my one big worry.
Mr. Shriram and Malvinder Singh, let me just throw this to you now. Corporate India representing here at the CII headquarters. The question really is that Swami says fiscal deficit, if it's being done in the quest of growth and if it's actually going to be used for infrastructure, is all fine by economists and our panel here. Is it fine by you, the fiscal deficit target being delayed by a year?
Absolutely. I think if you look at it this way, the fiscal target of 4.1, which is set for the last year, he's adhered to that. He has changed the plan for the future, so he's not adhering to any plan. This was a plan set by the last government. He is now changing the plan to over 3 years instead of 2 years with the objective of investment in infrastructure. And I think that's a very critical part of the need for rapid economic growth and job creation. So I think the issue is very valid, it's very sensible. And I think the other areas he's taken on infrastructure in terms of funding, in terms of fund collection, in terms of REITs, in terms of gold bonds, all these things are actually going to work towards giving a better foundation for economic growth in the country. So I think it's a good direction to take. See, I look at it this way. If it is a planned figure, you might change the plan, that's fine. If you planned the figure, adhere to that. So we changed the figure and planned it. So we believe that.
Maithili, would you buy that argument, the fact that he's done it in the quest to to push growth, but his planned expenditure hasn't really gone up? So does it all add up according to you?
What I'm very skeptical about is that though he's talked about increasing public investment, which really is a need of the hour, and he's talked of using the fiscal space, he really hasn't used the fiscal space that he got even from oil subsidy reduction. I'm really surprised that the non-plan expenditure is so much less than even the revised estimates for the previous 13-14 and less than that in 14-15. The only thing I can say in his favor is that he hasn't budgeted a very high number and then cut back. So he's been honest about it. So whether he's honest and and to kind of under budget as it were for plan expenditure, or to plan the hope for the moon and then cut back, I don't know which is better. But clearly, as far as those who are riding on government spending and government coming to the rescue of the economy, they're going to be disappointed. The reliance is entirely on corporate India and on overseas investors to come to the rescue of this country. And I'm not very sure that's the right way of going about it.
Will corporate India oblige? He's thrown the ball in your court. He's set the budget, which we are calling for Achhe Din. Will corporate India oblige?
I think just to comment on the previous conversation first, I clearly see and the way the finance minister has allocated the sum and really deferred the deficits coming down in a staged manner. Clearly that investment, he's planning to put it in infrastructure. I hope he does that, and today let's not second guess what he will or what he won't do. He's put out a plan and I think it's a good plan. In terms of investments, yes, a certain part of the kickstart of investments will happen with what the government is going to do on the infrastructure space. But clearly, I personally believe that this is the best time for corporate India to come in and make the investments, because sooner or later, as things start improving in India, FDI and foreign investors will start putting that money in. So this is the right time for Indian Inc. to get inside and get growth moving, because I do personally see over the next 5-10 years a very strong growth momentum for the Indian economy. We have everything going for us compared to what's happening around the world.
Right. Mr. Shriram, I want to bring in Swami as well, because he has a point of view on why is the investment cycle not getting revived. But the fact of the matter is that we saw the government change, the mood in corporate India was very buoyant, nothing changed on the ground in terms of investments. Do you believe this budget has set the stage for revival of the investment cycle? Will corporate India now go out and execute large projects, or do you think there's still way too many issues that are holding back investment which haven't been addressed?
I think investments is a matter of sentiment to a large degree.
But sentiment was there for 9 months.
I agree, but then I think that's why initiation of investments has started. I know many corporates which are already working on investment plans and growth plans. Our company too. We took a decision 4 months ago in our board doubling capacity of our chlor-alkali plant in Gujarat, and in our sugar factory adding another power plant to get better co-generation power. People are looking at investments again. It's not that it's not happening. But if the infrastructure side can take off faster, that itself gives a fillip to the entire investment activity, ease of doing business activity and job creation activity. And that can move faster. I think the focus this time on infrastructure is strong. We need to get it on the ground. If you see the last 6 months, from what I've read, the number of projects which has been cleared by MOEF is quite substantial. But once it's cleared, you're still having the study done, getting the contract signed, getting the funding done, getting all that done. It can't happen in 2 months and 3 months. It takes some time. One challenge the government does have is the lakhs of crores of past infrastructure projects or investment projects which are held up. How does one sort that out? And how do the banks sort that out? Because they've got that written as a NPA or potential NPA. Something has to be done there to take care of that. In CI, we've suggested, at least for infra projects, can you not take it into an asset restructuring company type on a separate company, separate balance sheet, have the corporates doing it, the banks getting into new models of how to make it work. We've also suggested the government has to come in now to set up infrastructure projects of their own and then give it with the private sector on a bidding basis to manage it and revenue share. That's one way of which you can actually get it faster, because the procedural time for clearances and all that takes so long. We've had projects pending for 2, 3, 5, 7 years. We have to expedite that to actually get things kick-started.
Sure. Swami?
Swami, Finance Minister Jaitley did speak about rebalancing of the PPP model, and he has said the sovereign has to go out there and take greater risk. Will we actually see the PPP model being revisited? He had spoken about this as 3P India even in his previous budget. Precious little happened on that.
Well, as I said it at that time, the PPP model is broken. Now everybody has accepted it's broken. There is a lack of clarity on what the new model is going to be. Without doubt, the government has to take a larger part of the risk. But how? It hasn't actually been spelled out. These are I think some of the fears that yes, there are a lot of good intentions, but how do we convert these intentions into hard investment on the ground? Because until there is much greater clarity on what is the government risk sharing, what is the other people going to do, how will this affect the banks? I mean, if all this is not sorted out, then on the ground, you are not going to get capex.
Right.
I think I've been so critical of the budget. On this point, I think I have something in favor of the budget, so I must make it. I must make my statement here that as far as the PPP model is concerned, the government has proposed something in the road sector, which I think is a very good move, where they share the risk, where the government does the initial procurement of land, etc., and they do it on the annuity basis. The toll collection responsibility is not that of the private operator; that is that of the government, and then government passes on annuities to the private operator. So I think that kind of hybrid annuity model could be one way where you marry the PPP model with something that the private sector invests and the government also plays its part. So I think there is some hope, Swami, of repairing the traditional PPP model.